Hey, welcome to The Explainer. Today, we are going to take a sledgehammer to a piece of financial advice that feels like it's been around forever. You know the one, that buying a piece of raw land is one of the smartest, safest investments you can possibly make? But what if that timeless wisdom is actually a dangerous myth? Let's dig in.
I bet you've heard this 1,000 times, right? The classic line, usually from Mark Twain. Buy land, they're not making it anymore. It's so simple, it feels so true. It taps into this really deep-seated idea that owning a piece of the planet is the ultimate safe bet. It's a finite resource, after all. How could you lose?
Well, that's the big question, isn't it? What if that piece of common sense is actually a financial trap for almost everybody who tries it? What if for 99% of us, it's not wisdom, it's just a myth that sounds good?
All right, so here's our game plan. First, we're going to unpack the myth itself. Then we'll get into how land can turn into a serious hole in your pocket. We'll talk about the long, lonely wait when it comes time to sell. Then we'll pull back the curtain on who really wins in the developer's game. And we'll wrap it all up with the single most important takeaway for any smart investor. Let's do it.
Okay, so part one, the land investment myth. There's this powerful emotional pull to owning land. It's real, it's tangible, you can walk on it, you can touch it. In a world of digital everything, owning a simple plot of dirt just feels so secure, so permanent. But that feeling can be incredibly misleading.
And that leads us straight to our first major problem. Owning that piece of land can start to feel a lot like owning a hole in your pocket. Because while you're sitting there dreaming about its value skyrocketing, it's actually just draining your bank account. These are the hidden costs of owning something that produces absolutely nothing.
Here's a way to think about it. Buying a piece of raw, undeveloped land is kind of like signing up for a subscription service you can never, ever cancel. Every single month, every single year, money is flowing out, but there is absolutely nothing flowing back in.
So what is this stuff you're paying for?
Well, it's not pocket change. You've got property taxes every single year, whether the land's value goes up, down, or sideways. You have to have liability insurance just in case somebody wanders onto your property and gets hurt. You might have maintenance costs, like clearing brush so you don't get fined by the county. And yeah, you could even have HOA fees.
Let's just slap a number on it. Now, of course, this is just a hypothetical, but it's totally realistic for these costs to add up to a couple $1,000 a year or even more. So a number like this, negative $2,500, means you are literally paying for the privilege of waiting for your investment to maybe someday pay off.
This all comes down to a really important financial term: negative cash flow. It's super simple, but it's critical. It just means the thing you own costs you more to hold on to than the money it brings in. Think about it. A rental property has rent coming in to cover the mortgage and taxes. A good stock might pay you a dividend. Raw land, the income is a big round zero. Every single dollar of expenses comes straight out of your wallet.
All right, let's move on to part three, the long, lonely wait. So not only is this piece of dirt costing you money every single year, but what happens when you finally decide, okay, I'm ready to cash out? Well, this is where the second huge problem rears its ugly head. The reality of selling raw land is not fun.
Just look at the difference when you compare it to something like stocks. It's night and day. You want to sell a stock? You pull out your phone, tap a button, and it's done in seconds, for basically free. Selling land? You're looking at months, or more likely years. The transaction costs are huge. You can lose 6, 8, even 10% of the price to commissions and fees. And your market? It's not global. It's a tiny local group of people who might be interested. This is what financial folks call illiquid. And it's just a fancy word for a very simple and very painful idea: your money is trapped. It is locked up tight until that one specific person who wants your exact piece of land at your price finally decides to show up. You can't get your cash when you need it. You're on their timeline, not yours.
So this all begs a really important question, right? If it's such a tough game for the average person, who is actually making all the money from land? Well, welcome to Section 4, the developer's game.
Here is the absolute key. For you and me, land is not a passive investment. It's a raw material. And just like any raw material, lumber, iron ore, whatever, it needs a professional to come in and do a ton of work to turn it into something valuable. That's where developers and builders come in.
And believe me, this is not a simple weekend project. This is the real path to profit. First, they do intense analysis to buy land in the path of future growth. Then comes the entitlement phase, which is basically a long, expensive battle with the local government to get zoning and permits. After that, they have to physically spend millions of dollars to build roads and bring in water and power.
Only after all of that can they finally divide it up and sell off the finished lots. This is a full-time, high-risk, incredibly expensive business. So what does all this mean for you? Well, that brings us to our final and I think most important section, the Smart Investor's Takeaway. This is all about redefining what we even mean by a good investment.
Probably the most powerful way to think about this is to just divide all assets into two simple buckets. In one bucket, you have productive assets. These are things that pay you to own them. A rental property sends you a check every month. A dividend stock deposits cash in your account. Then in the other bucket, you have non-productive assets. These things cost you money to own them. And look where raw land sits, smack dab in that category, right next to things like gold bars just sitting in a vault, costing you storage fees.
And that right there is the whole enchilada. If you take away only one thing from this entire explainer, please let it be this. Productive assets work for you and put money in your pocket. Non-productive assets, like raw land, make you work for them, costing you money while you just sit there and hope. So that leaves us with one last critical question that you should ask yourself before you ever think about buying a non-productive asset. Be honest with yourself and ask this. Are you actually investing, or are you just signing up to be the unpaid caretaker for a piece of dirt, hoping that someday someone else will show up to do all the real work and make the real profit?